All right, everybody. Hope you guys are having a good day. I recognize that it's going to take a little bit for some folks to trickle in. Um, and let me just turn this off, everything off, so that way, if I look at some of the questions and stuff like that in the channel, um, it doesn't cause any noise in my headphones and have any echo or anything like that. So things are going well. The market's kind of rebounding, 75% basis hike today. And with that, we're up to about 2.25 to 2.5% on the federal funds rate. So it's interesting to see the changes of what's going on. I'm seeing a lot of real estate getting cut here in Houston. Houses that were like only on the market for like a week, 2 weeks, and there were some of them getting cut 15%. So it's pretty interesting to see the polarization of what we were just seeing literally less than a year ago. Markets going crazy with respect to stock market as well as the housing market. And now here we are just a few months later, literally less than a year later. And the free money has dried up for sure. So just going to hang out here for a little bit and see if anybody wants to give a quick chat. Hope things are going well for everybody. And just been working a good bit and continue to do some sponsored work and trying to do some different formats and stuff like that with the channel. I had a partnership come up with Seeking Alpha, so I continue to work with that. Continue to work with Red Cloud as well, so they're providing a good amount of work. But hope things went well. 10-year Treasury went down. Must be expecting rate cuts soon. I don't think it's that. I think it's just the markets are getting bullish, and so money's moving back into Treasuries. And when money moves into Treasuries, it expands the price. With the price, it goes down, so the yield will go down. So bonds are interesting, man. Bonds are interesting for sure. Buying those PA rentals, that's the hope, man. That's the hope eventually. There's definitely some eyes that I've been having out there. I've had a good 2 weeks back in Pennsylvania over the July 4th weekend and going up until when was that? I don't know when I exactly flew back, but I guess it was not this past Sunday, but the Sunday before. So about 10 days or so. And hung out with some good friends, man. It was a phenomenal time. They're all starting to do the same, buy rentals, and they're all trying to get their lives together. So they're buying houses. So it's cool to see just where people are in their lives and how well they're doing, and just really proud of a lot of my friends. And they're really just starting to kickstart their investing journeys. And a lot of them are focusing on real estate, which will be really cool because I focused majority of my portfolio in the stock market. So it'll be interesting to see how our portfolios really differ down the road. And it's really having conversations with them really has pushed me to try to look into real estate as well. So, but yeah, just interesting results, man, out of this Q2 earnings report so far. I'm really still looking forward to Palantir. I'm up to like 3,300 shares in that thus far. So I'm really excited to see what's going to happen with that. But Google, I got my 300 shares of that now, so that's pretty cool. Both 300 shares of Amazon and Google. So I'm running covered calls on those. Just closed out my first covered calls on Google. I think I made either 50 or 75%. I don't know, but it felt good. And then rewrote, I think it was for, I want to say mid-September. So I think like 45 days out or so. But yeah. So yeah, other than that, I'm trying to think what else I've really been getting myself into other than throwing myself at work. Not all too much. So I will say I tried going live on my live stream channel, and with that, I no longer have access to it. So unfortunately, don't have the ability to go live on that channel. Otherwise, I would have gone live on there. And to be frank, it's been many months, many moons since I've been able to do. What's that? Been many moons since I've done a stream here on the Map Money channel. So let's see. Oh, people are just messaging me. But yeah, I'm really curious to see what folks think of Google. I thought it was interesting. I think you're continuing to see the I think Jerome Powell in his speech really summed it up perfectly. It's like you have the cooling effect of things that people were still working at home in 2021, and a lot of those folks have had to go back to work. I know as of like December-ish 2021, my company has tried to get people to be more actively in office and in seats. And so with that, you're going to have a lower revenue stream coming from the Googles and Facebooks and Snaps of the world, right? People aren't staying at home as much as they used to. Is there a hangover of still folks working from home, working remotely? Absolutely. And that's going to still be embedded in the price of in the revenue streams of all these companies. But a lot of that has gone away. And then you saw evidence of that with esports going crazy during the beginning of the pandemic, and since has really cooled off. And it's almost very similar to that. It's like, yes, esports is as big as it ever has kind of been over the past, say, like 5 years or so. But it's cooled off, right? It's pretty substantially. And so I think that can be thrown at a lot of different things. I think a lot of people just assumed we were never going to go back to work. And over the past 2 years, whether it was the free money that was coming down the pipeline, coupled with the expansion in activity in e-commerce and staying at home and the driving of ad revenue because of that, is really being offset by people going back to work. And so the fact that Google and a lot of these other companies are continuing to go back at single-digit growth amidst huge year-over-year growth years from 2020 to 2021 is pretty expansive. And pretty impressive, to be very frank. And I expected a little bit more earnings compression associated with that. And the fact that you're able to continue to grow from 2021 to 2022 with lack of free capital, lack of people basically utilizing your site as much, this is impressive. It shows the true moat of these businesses. And yeah, that was pretty much it. No, not a forgot password. With respect to that, it was basically logged into the StreamYard where I am streaming from right now, and it's no longer connected to my account. So it is what it is, man. But yeah, hopefully you guys are doing really well, and curious to see what other things are going on for you guys. So more than happy to talk and ask questions. Everclear boy, good to see you, man. I appreciate you watching the content, and hopefully you're getting some good. I'm curious what you think of my new interview format with these CEOs. Is it helpful? Is it easier to digest? And really curious to see if folks want to add in questions in the future for silver, lithium, and uranium companies, because that's a lot of who I work with in most of the times. So, but yeah, I'm trying to think what else, man. Yeah, I've also thought about just buying something here in Houston as well as a property. I like where I live to an extent, but some of the things it's just like you can't change, right? So you can't be like modifying the grills here at the apartment complex. Like that's kind of set in stone. And so if I want to smoke something, like literally like a smoker and like smoke some ribs or smoke something, then at the end of the day, I can't do that because I live in an apartment complex. But pool's great, the amenities great. They keep, it's a nice new modern apartment. But at the end of the day, from what I'm paying, some things need to be tidied up a little bit. Like I went down to the grill today and I was going to grill some steak for lunch, and with that, the igniters on the grill don't work, and they haven't worked for like a year and a half, and they have an ignite button, right? And so the fact that they don't work is pretty sad. And I just honestly, by the time I was like, I have to go up literally 25 stories in my elevator. This is first world problems for you. 25 floors in my elevator, get a lighter, come back down, light the grill. And I was like, I have it 2:00. I got to get to the 2:00. I can't do it. I just couldn't do it. So it is what it is. But good opportunity to work from home today. Otherwise, I probably would not be on the stream right now. And so it's been a few weeks since I've been on one. So it feels good to kind of be back. Good to have great to have a live stream with good old Matt Money. I appreciate you, man. I appreciate you always continue showing the support. It's always love. Am I still selling options on TQQQ? What's the monthly income been doing? I got assigned a lot of my TQQQ and I'm holding on to them. So hopefully we're going to have a rebound, and I'll trim some of that maybe. But I anticipate holding a lot of it, probably 75%, if not more of it. I haven't been doing much option writing, really. It's mostly been covered calls, and I should get back to it because I've kind of cleaned my slate. There was some there was some hangover from some of the poor ones that I wrote a long time ago in 2021, and I was continuing to roll that I just ate eventually. And so now that those are kind of cleared off, and I feel like we've kind of seen somewhat of a bottom, I'm not going to write super close to the money or anything like that, but I'll probably continue to do that. But income is from dividends has been really good. I did sell it at Exxon, so that was a good Q2 dividend that I got. But going forward, I mean, that was about, I forget what it was. It was pretty substantial. I think it was like $1,500 or $1,600 a year. So moving that into the S&P, so now I have a pretty good substantial position in S&P. So I'm running cover calls on that, not naked calls, but cover calls. But yeah, we'll continue to see how that goes. But I think honestly, if you don't have any TQQQ, you can handle the risk, and you have a percent or two of your portfolio that you're willing to risk, I think it's a good opportunity, man. I've obviously lost my shirt, down about 50% on it. But at the end of the day, I think in a good rebound, I think it's a good opportunity for sure. Big steak guy, dude. Yeah, I'm trying to eat healthier, right? Like obviously I'm not the fittest guy, so I'm trying to eat a little bit better, eat a little bit more like lean protein. And the salmon comes into play, the steak comes into play, the chicken comes into play. A good non-fat yogurt comes into play. What else? What else have I been munching on? Oh, a lot of shrimp, man. I like. I just go to the market, man, the frozen food section, and I'll literally just go and grab shrimp and scallops too. A lot of scallops, and the scallops are tough, man, because they're. I don't want to say they're super expensive. Like obviously, if you go to Eddie V's or something, you're gonna pay, but really, just let me actually get this stream out to the broader Twitterverse here, and hopefully you guys can give me a quick second. I'd like to. Always one of those things where I'd love to get more people on, man, and get a more fluid conversation going. But at the end of the day, it's hard. Sometimes the YouTube algorithm Twitter algorithm doesn't want to put it out. So at the end of the day, I'm kind of at the liberty of those guys. Yeah, a lot of salmon, a lot of sea scallops. And scallops are dangerous enough where like you could eat 4 or 5 of them and be like, this is delicious. The next thing you know, you're going through a bag, and like a bag is a couple bucks. You know what I mean? Like they can run up in price. Shrimp is not that bad because I generally will get 2 to 3 sittings out of as an appetizer, right? For the shrimp, like I'll generally eat like 6 to 10 smaller shrimp, not the big boys that you get at restaurants, but 6 to 10 smaller shrimp, make up some cocktail sauce, some horseradish and ketchup, and that's delicious. Add a little bit of pepper, and yeah, you're off to the races with a little quick appetizer there. But yeah, scallops are dangerous. Love the interviews. Interest in battery minerals and sustainable processes. I agree, man. I think uranium and lithium are definitely ones I want to get a little bit more involved in. I like gold and silver as miners. I'm not a big precious metal holder myself. I think the mining industry, I get it because it's a very cyclical industry. And so I relate to that a little bit because I work in oil and gas. And so, yeah, I think, and shout out to the green screen back there working overtime. But yeah, if you guys are ever curious, you want to chat offline or anything about what I do, feel free to reach out. But yeah, I relate a little bit to the mining industry. It's not 100% because obviously you're dealing with a lot of liquids and resources in a liquid sense when you're dealing with oil and gas. I guess gas is a gas, but when you're dealing with mining, cyclical business, still mining, still harvesting resources. So I get it. And it's kind of in the same business. I was in the same college because I did petroleum engineering as a degree, same college as the mining engineers, which wasn't actually in the engineering college because I'm not smart like that. is actually in the Earth and Mineral Science colleges at Penn State, which is where I went to school. So it is what it is, my guys. So yeah, if you have any questions, Everclear Boy, just let me know. What types of deltas was I selling? Oh, for the covered calls. Guess you don't really have. Guess you really don't want the shares called away. I don't. Yeah, a lot of those things. So a lot of times, what I'll do, especially if it's a very volatile company, I'll sell weeklies, right? So Palantir, I'll sell weekly. TQQQ, I'll generally sell a weekly. And I try to get like to the 95 chance of probability success, which ends up being around the 3 to 5 delta area. And that's just so I don't get the shares called away, right? You have to have a pretty substantial move in the market. And what I'll generally do is wait for a good move up, and I'll basically write the covered call then. Like today, after the basis hike, I took the opportunity to close some of my opportunities that were ending next week or maybe middle of next month, and I rolled them out to September. So depending on what company it is, how volatile it is, like the Pepsis and J&Js, I'll do monthlies. So I'll generally look 45 days out or so, do a contract on that. But something like a Palantir, TQQQ weeklies for sure, and SPY generally weeklies as well. And I don't mind if it's just $10, right? Because you think about it, you do $10 on a contract, you got 2 contracts, that's $20. You got 4 or 5 different positions, then you're looking at $100, and it just all really adds up. Like I mentioned earlier, I just bought back my first set of Google covered calls that I had wrote, and I made like 50, 60% or 70% or something on it. I don't remember. I closed a few after the FOMC hike and rolled out some of them to mid-September. So that's just the lay of the land, man. And if it's a company that I'm really trying to get rid of, I'll write closer, right? I'll write to a place where I honestly wouldn't mind it getting called away. Like an Altria Group, I was writing at 55 before the Juul announcement, and I was really hoping that it would kind of get called away. From a dividend standpoint, no, because I think it's my biggest single individual security dividend pair. I have other things like XYLDs and stuff in the world that pay me more in dividends, pretty much. And Realty Income's not too far behind. That pays me $100 or so a month. But the Altria Group, man, that was a hefty dividend payment every month, or every other month. Sorry, every third month. Was it close to 500? Am I drinking something? I might be, man. I don't think it was close to 500. Anyway, I guess it's not important. But so yeah, before the Juul announcement, I was trying to sell 55 covered calls on that, and I was making some decent money. Not great, but not bad. And now that it's dropped down to like 43 or 43 bucks, 43, 44 bucks, can't really get that much for it. And I don't really want to sell covered calls on Altria Group down in the mid 40s. I just think it's too cheap. So yeah, I generally look at for the covered call side, 5 delta or so. But if I'm trying to get rid of it, man, it doesn't matter. It's just really, where do I think it would be a good price to get it called away? And then on the put side, it really depends, like how much money I'm trying to make on something and if I'm bullish on it. So I'd no longer write puts on companies that I don't want to own. And I've really simplified my strategy down. When I had a lot more time to do a little bit more day trading, let's just be blunt, which was like late 2020, early 2021. I had a very strict schedule. And with that, like there was like hours, like an hour or two built in, like every day or so that like I was waiting between meetings, and I did most of my work during those meetings. Like I was doing like executive spreadsheets and stuff like that. Like that's what I was preparing. And so I needed to do collaboration in order to do that stuff. And unfortunately, like once I switched positions going back to the Gulf of Mexico, it kind of changed a little bit. I don't have as much downtime during the day to do some of that stuff as I used to. So like TQQQ, I was writing at the money. And it got me burned, obviously, because the market turned. And to be fair, I mean, from here, with the economy the way it's in, the market pulled back the way it has been, I wouldn't mind renting a contract or two of TQQQ at the money, knowing that in the long term I plan on holding it. But yeah, I think you just have to be cautious of what you're doing, and you're not overextending yourself when it comes to the writing put side, and guarantee that you actually want those shares. But you could buy and sell, you could buy calls and puts. That's a little bit different. You're kind of outlaying whatever you want it to be and hoping that it expands, and that's kind of your maximum risk, right? But when you sell, your risk is a little bit different. So you like Albemarle? That's cool. Completing a battery recycling plant and also own land for mining. That company I had on the channel, that lithium company, they have a property right next to Albemarle, actually. So in Nevada. So pretty cool. Yeah, man, my body just, obviously, I'm a carb boy, man. Like, obviously my body just doesn't respond well to it. A lot of inflation and inflammation. So Hunter, much appreciated, man. Really appreciate that. I really just try to be as transparent as I can, man. And I don't try to hide anything from anybody. DCAing into TQQQ. After today, I'm down 37%. Okay with the volatility. It's 1% of your portfolio, 1%, and SOXL down 50%. Yeah, man, you have to take a taser if you meet Hunter Medi. Sounds sus. I know, man. I'm not the man, so I don't get it. Oh, come to New York. I didn't see that part. DCA into TQQQ. Yeah, I mean, that's a good, you know what I mean? Like 1%, you can't be that upset if you have 1% of your portfolio down 37%, right? And I hope you just don't like get too anxious and try to make it 10% of your portfolio or anything like that. I'm holding on to it, man. I'm holding strong. Like it's not doing anything different than what I was expecting during a 20 to 30% retracement in the market. So, I mean, if it was down 90% or something like that, very different story. But, you know, it's doing what I expected, right? And it gives me an opportunity to load up. And hopefully, you know, over the next 10 years or so, we have a big leg over and to the right. And at the end of the day, sorry, I got a work message there. And at the end of the day, I think it'll come back in spades for a lot of us. So yeah, man, TQQQ to the moon for sure. Coming to New York, do a meetup. I want to chill, have a beer. Absolutely, man. I've met up multiple people, man. I met up with Kyle when I was in Toronto. I met up with one or two other people as well. And yeah, I don't mind, man, especially if it's in a public place. So yeah, don't worry, Chase. I appreciate it. You're always a good man to always have in here. And don't feel obligated. This is more like a, hey, what's going on sort of space. Nothing too crazy. But as always, man, love you and appreciate all your support. Chris, what's going on, my guy? Hope things are going well. When are you going to get me on the Friday streams, man? So we can talk about the PLTR, Mr. Palantir. But yeah, you guys have much better setups than I do. I still don't even have my TV hung. I've been living here for 2 years, and Bailey over here gives me crap about it all the time. So thank you for showing up, Miss Bailey. I know it's late for you. It's like across the pond over there. It's a little bit late. TQQQ and SOL might be good. Just make sure you have trailing stop losses to mitigate losses. Yeah, I guess it really just depends, you know, if you're trading or whatnot. But I'm more of a proponent of holding it long term and being transparent. We'll see if it ends up doing well for me, but it's a smaller portion of my portfolio. It's actually grown to about 4 to 5% of the portfolio now because I've got some puts assigned to me, but and that'll blow up. Like if it goes on a massive run and we go back to all-time highs within the next year or so, that part of the portfolio is going to do really, really well. But I'm not forecasting anything. It's more of a hedge for a move back towards all-time highs at this point. I'm free, man. Yeah, I'm free. It just depends what day it is. If it's still Fridays, you know, I can make some time. That's not a problem. I used to do a stream on Fridays and been taking some time off of that. So what's going on, OJ? I don't know if I know you particularly, so welcome to the stream if I haven't met you before. Hope to chat with you more. or more to DCA if it hard drops. Yeah, man, I'm always DCAing. In that case, what I probably should do is when I get a little bit more money, do some more, write some more puts on it and collect some premium that way. Strawberry blonde every month. Your natural redhead. Gingers have no souls. You're right. I don't have a soul. Geez, TQQQ's 10% of your portfolio. Congrats, man. I mean, the fact that you have the cojones. What made me want to invest in Palantir? So I use it at work. And so I started using it, I don't know if it was 2015 or 2016 at work. And it was way better than the program we used before. And I really enjoyed working with the folks that came to our company to help build the software from ground up. So Palantir is not like a Microsoft suite where you just have Microsoft Word and it just works for you, right? Palantir is an operating system that works around data. And instead of being focused around like using your computer or your device for, say, making videos or something of the like, you're focused on data and analytics of the data, data manipulation. So it's literally an operating system built around analytics. So it's pretty cool. And Microsoft Power BI is a little bit like this, right? So if you've used Power BI, you can kind of understand a little bit. But what's nice about what's lacking about Power BI is the data doesn't necessarily come from Power BI. You have to feed the data into Power BI, right? And the thing that's nice about Palantir is if you set up your data lakes appropriately, your data streams and stuff of the like, you can have that pretty seamlessly. And within 5 minutes, you're visualizing it automatically on a data. You can stream the data very much like you're streaming this video content, but instead I'm streaming pressure sensors, temperature sensors, and stuff of the like. And so you can make real-time data on that. You can write equations in there, you can code within there, and it's all about an operating system focused around data. And so I really loved it. And the guys came and they said, straight up, like, what are you trying to solve? What are you trying to do? It wasn't like, here's our software, use our software, do this. It's like, Matt, what are you trying to do at your job? Like, how can we please put the TV on the wall? Matt, what are you trying to do at your job? What are you trying to solve? What are you here for? What are they paying you for? Matt, what is it that you say you do here? No, I'm just kidding. But it was a different way to understand, like, and I was like, wow, like you actually care, right? Like you're not just trying to like be nice and hear what I have to say and then try to be like, try this piece of software. It's just like, no, they were honestly like, what are you streaming? What data do you use? How can we best like create something to help you? And so we created some of the very early versions of what they use today on Palantir, and they've since developed them and obviously signed and been able to expand to a multitude of different industries. But it was really cool. And I remember few key people within there that I developed like a really cool relationship. And it was like, they obviously were there for Palantir, but honestly, like talking to them because they were great people. And like, I just relate, like when I think of Alex Karp and I think of all these people being like, I think of those really intelligent, bright-minded people. And I think of the Palantirians and I'm like, those are cool dudes. Those are people that I want to not only have a stakeholdership in their success, but a shareholdership in their success. And so I promised myself that as soon as the company went public and it went direct listing September 30th of 2020, I invested. And or was it 2019? Was it 2019? I think it was 2019. Because I think I was home on a flight from Trinidad or something. It was 2019 because, it was September 30th, 2019 because I think. Maybe I'm wrong. I don't remember. It was either September 30th, 2019 or 2020. It was 2020? Okay. Oh, okay. Because I remember when I bought my first 1,000 shares, I was literally on a subway in New York, just got off the plane. And I wasn't sure. September of 2019, I did traveling back to the U.S. September 2020, I did traveling back to the U.S., both from Trinidad, because I was working in Trinidad, and both I was on a train in New York. So I got confused. So, sorry. So I went off on a tangent on Palantir. good bit. But so I bought my first 1,000 shares on direct listing day, and promised myself I'd hold it ever since. And so I promised, I'd either let it go to zero or invest more. And so I'm up to 3,300 shares. My cost base is around $13 or so. I was really upset when I bought my second 1,000 shares, because I think my cost basis went up to like close to 15 or just over 15. And I know in the long run, it is going to be what it is. But and I think it's going to be in the $100+ per share range. But yeah. Good to see Matt on the Friday stream. I'm sure he's got some great insight to share. Thanks, man. Yeah, I love Palantir, man. I talk about it all the time. I use it all the time. You create apps in Power BI. That's awesome, man, because I use some of the widgets too, man. Like, they're important, and I use for super simple stuff. Like, the thing that I love most about Power BI is I create just like simple tables in Excel, and then I just do some quick rickety sort of stuff and connect it to a Power BI, and I literally send it to people's phones, and they could literally just pull up Power BI and be like, okay, it's almost like an Outlook, but I basically have like a list of when all crucial decisions need to be made. I'm not going to get too much into it, but it's super simple, and I've used it before for things that I now use Palantir more so for, but yeah, some of the data I actually do still pull from Palantir. So the thing that I like about Power BI is it sometimes can be quicker if you're very concise about what your dashboard shows, very quick to pull up data. Whereas sometimes in Palantir, I love Palantir, but it has so much data, sometimes it gets a little bit bogged down. I think you just messaged me this. So sorry if I didn't respond. Do you think we'll see a reversal of SPY off the 405 area? I think if we moon, honestly, here's a pretty sticky point. I think if we moon and we move up to the 405 area, I think we'll go on a little bit of a run to the 420-ish range. And then I think that that's when we see another resistance. I'm not really a technical analysis kind of guy. I'm more of just like a buy when I see value kind of guy, buy every time you get some money kind of guy. I'm more of a long-term investor. But I do honestly think we'll be down to up to the 405 area. And honestly, I think we'll probably go back down tomorrow. If we don't pull back a little bit and go on to a quick run up to the 405 and beyond area, I think we're going to go probably back down to the 380s, 370s on the SPY. And I wouldn't honestly be surprised if we have another leg down to the 360, 350 range. But I honestly don't know. And if I see we get to the 405 with a lot of volume and a lot of push, I honestly don't see us stopping until we get to the 420 range. But right now, we're kind of at that sticky point, right? Because last time I checked on Robinhood, I just use it because the charts are quicker and it's super easy to use. I don't use it really to trade. But let's check the SPY. It bumped up to 400, and I think it retraced. No, it's sticking at 465 cents. So can't complain there. So I'm confident that if we're able to continue this trend upward, we'll probably see a continuation. But I have a feeling that it's going to stick at this 400 here that we're seeing today, and it's going to come right back down to the 370, 380 range. But what it is enticing to see is we are making higher lows, right? And that's nice to see that we're kind of on this trajectory of higher lows, which we haven't been on in the first 6 months of the year. And so with that, I'm cautiously optimistic that we'll see a slow bullish market. Is that going to be a bull market rally extended into 2023? I don't think so. I think we'll have some bull traps in there. And I think that we'll honestly be hanging around the 400 to 420 range a lot longer than people think. But I think eventually, once we find some good news, which I guess it could be tomorrow, maybe, to be very frank, if the CPI numbers come out tomorrow, and CPI numbers came out earlier this month. If the GDP numbers come out tomorrow and they're not negative, which I anticipate they will be, and let's just say they're let's say 2 to 3%, which I don't foresee, then I can see this continuing on. Until then, I think we're going to go in a little bit of a hiatus for 3 to 4 weeks until we get the next CPI data point for the month of July. And it's been rather bullish, let's say, because a lot of materials and stuff are down. Oil's still slightly down. It's about a 20 to 25% retracement in oil price if you're looking at West Texas Intermediate. But gas prices are back up. Not petroleum gas like what you put in your car, but natural gas like methane, propanes, those are up. And I think that has a lot to do with the export facilities and the LNG. And I think it's going to continue. I'm very bullish on natural gas here. I think it's going to continue to be a constrained market. Oil, I think 80 to 90 is a good price for it, personally. But anyway, long-winded answer for you. But to be honest, on Apple earnings, I honestly just don't know. I don't follow Apple as much as I probably should, considering it's a $2.5 trillion organization. So I'm just going to stick back because I don't really have an answer for you there. It's a nice team environment, Palantir. I agree. Super limited, really easy to use. Yeah. Interesting. For the Friday Palantir stream with Amit, that's the hope, man. Yeah, the hope is I've been trying to, and I was invited probably about a month or so ago, and I just couldn't make it work, or I think I had something come up, or maybe it was an obligation with my other stream or something like that. So, yeah, no. And it was 2020. Thank you guys for correcting me. I work in oil and gas, an oil baron. Jesus Christ. No, I'm not an oil baron. I just try my best. Although we did get some good news, I think, this week. So I'm celebrating personally on that one. DCAing and making your wife do the same. You mean with Palantir? I hope. Asset tracking and updates. Oh, that'd be cool. You mean for like your own personal equities? I'd love to talk to you about that, man. I've thought about doing that. But honestly, I'm just so lazy when it comes to like tracking things over time. But at the same time, I do track it all manually. And I guess you would have to with Power BI too. But anyway. Oh, the SP 600 small caps. I agree, man. When we hit a market rebound and things go up, the 600 is going to do really well. I don't know if it's done. Let me just share my screen. Do I have anything up that's proprietary? I don't. Let me share my screen. Share my screen. Screenception. So let's just do, what is the S&P 600? Is it IJR? Yeah. Let's see. How's it looking, my guys? It's about to exit its channel, man. So it's very similar as like the S&P 500 right now, where it's kind of got this downward channel. Sorry, it's like really rudimentary. Let me zoom in too. But if it continues, man, it's gonna bump. So we're at what, 98.72 now. I could see it easily going to the 104s pretty quick. So another 4 to 5. I guess it's closer to a 6 to 7% jump from where it is today. And if it gaps up from there, it could go to 111, which would be another 5 or so percent. But past year, down 9%. I'm curious about the S&P, how much we're down year over year. Now that we're getting into like the July timeframe, about 9% as well. Okay. That's what I'm seeing. Like I'm seeing, I mean, this is the thing. It's like the downward trend on the S&P started really sharpening down. Like I was expecting it to kind of be more shallow, and then it just, in the month of April and May, it just really shut down. So I don't know if the big one's going to be, if you were to like draw a technical line out, like if we get to this 415, 420, that'll be a big spike up to fill that gap. But who knows, if you were to draw a line out, is it going to be the 430 range that you kind of have to beat? But I know that we're kind of like on the 50-day moving average as well. So that is what it is. Could that we're nearing the end of interest rate hikes and be bullish? I think that even if we go into a recession tomorrow, we're still going to be raising interest rates personally. And I think we will be until some major data changes, which I'm still in the belief that in the next month or two, I don't know if it'll happen in July. It might happen in August. The CPI reports, I mean, where you have a big reversal. I'm talking 2% in the opposite direction. So we're at 9.1 or whatever percent now. I'm talking going down to the low sevens. And it's I don't know if it's gonna be, maybe it'll, like this month, I guess we find out like the second week of August. For July, maybe it'll drop down to like the high eights or something like that. But I don't know if it's gonna like do an immediate reversal. But one of these months, like, I don't know about you guys, and I'm not trying to like, and maybe money just like means, sorry, this is going to sound really dickish for me to say. I don't know if money just doesn't matter to me as much as more. But I went to the supermarket, and like I said, I'm trying to eat a little bit leaner, and I went to go pick up some steaks, and I was like, God damn. I was like, these steaks are a little bit cheaper than when I looked like 6 months ago. So I don't know if they had like 80 day, not dry aged, like just old meat they're trying to get rid of, discount, and they're like trying to catch weird people like me, bachelors that just like don't really know anything about freshness, or what. But I was surprised. Like I was seeing a strip steak for like $3 to $4, and I was like, God damn. I was like, that's not that bad. I'm used to seeing them at like 7, 8 each. And so when I saw a pack of them for like 15 or $16, like 3 of them, I was like, they were baby steaks, my guy. Like, you know me, I'm a big dude. Like, I don't eat baby steaks. So I was pretty surprised to see. Anyway, they still had some of the ribeyes, and I was like, And those were still, like, I bought a pack of ribeyes from Costco, and these are some big boys. Like I said, I made one for lunch, and I could only eat half of it. So I put the rest in the fridge. I'll probably eat the rest of it for dinner tomorrow for lunch. But yeah, like that was $50 for 4 of them, but really they're the size of 8. They easily are 8 portions. So I don't know. I thought the prices have kind of come down because I feel like the same what I saw at Costco a couple months ago when I was trying to get some ribeyes was like 60 to $70. So I don't know. PE is single digits for IJR. Yeah, man, small cap's doing really well. Personally, I think it's always the one that gets hit the hardest when recessions come, and it's always the one that moves the hardest. So it's more volatile, right? Bigger peaks and troughs for IJR than you would for an S&P. But S&P, man, still trading at a pretty elevated level. So I'm curious. I think we're pretty good through earnings yet. I don't know if we're not halfway through or anything. Maybe we are. But I'm honestly cautiously optimistic that earnings aren't going to be as bad. But maybe Q3 is really when the chinks start coming out of some of these people's armors, because I guess we're reporting through June 30th. So I guess we're reporting through, 27 days ago, and things haven't really started to fall apart as of yet. So who knows? Maybe it's a slow train wreck that's occurring, and I just am being an optimist as I always am. But regardless, every time I get money, what is that? Whenever the next payday is, end of the month. So 31st is on Sunday. I get paid on the last day of the month, so I'll get paid on Friday. So I'll be buying on Friday. That's what I always do. Is there a push to stockpile some LNG in Europe before winter? Is that why the prices are up? I would love to talk about this. Let me keep this comment up. So Russia supplied a lot of Europe's gas and oil. They provided about 5 million barrels of oil a day. I don't know how much gas they provided. But since they've had some sanctions, obviously, with that, Gazprom, who was the prominent producer of gas in Russia, was exporting a lot of it to the Nordic countries, coupled with Germany. And with that and everything that's going on, they don't have as much. They're not exporting as much. And some of the contracts, people aren't renewing contracts that are still in place. People are still fulfilling, but future contracts, they're not fulfilling. And what that means is when you buy futures, you can buy futures for, say, this month, next month. I could buy futures for a year out, right? And so those contracts will be fulfilled. But generally speaking, people like to buy a month or 2 months out. And so what's kind of going on now is all those contracts have dried up. Nord Stream 1 is down. People aren't getting as much from Nord Stream 1. And with that, obviously, Europe doesn't produce as much of its own natural gas because it was getting it from Russia. They get some from the North Sea. They get some from Norway. They get some, there is still some natural gas production, and there's still some that comes from Azerbaijan that goes through Georgia, Turkey, and there's some gas that comes through there. But Europe is generally an importer of natural gas. The United States, on the other hand, has had massive amounts of natural gas to the point where if you looked at the discrepancy between prices of, say, Japan, Asia, the rest of Europe, huge price discrepancy. So a lot of that had to do with the fact that we had more gas to know what to do with. We started drilling horizontal wells, fracturing wells, and that allowed us to have the shale boom in the late 2000s, and that kind of came in and impacted eventually the oil price in 2015, 2014, and that's when we've kind of had that cyclical oil price ever since 2012 to 2014. So with that, basically we've had this cheap feedstock. Gas prices in Europe have skyrocketed, $30 to $40 or euros per decatherm. The same in the US is a fraction of the price. Now, we were initially during this journey $2, $3. And since then, we've had a lot of export facilities starting to export that gas. Now there's a lot more demand to export the gas than sell it locally. So before, when margins weren't that great in Europe, it didn't make sense to say, spend all that transportation costs, get it on an LNG boat, send it all the way to Europe, and then, because you have to have a margin to do that. The margin now is so thick, people were being able to buy it for $2 and sell it for $30, $40 in Europe. There's a lot of margin to play there. It's not like oil. Oil, you're selling things, it's a lot more globalized of a commodity than, say, natural gas is. Japan, also big importer of natural gas. Japan also has vowed not to buy any more natural gas from Russia. So that puts a lot of export benefit and price floor on natural gas coming from the United States. We have more gas than we know what to do with. We have more gas than we know and we can use. So instead, we export it. And with that, obviously, there's going to be a greater demand. So that's going to put a strain on the local supply. The local price goes up. We're now close to $8.50 to $9 an MCF. And then it's still trading at above 40. But this is in the summer. We're in summer in Europe. We are in summer in the United States. They still have to worry about, and when we get to the winter time frame. And apparently, I don't know, I need to check. It's been a couple months. The storage units in Europe have not been refilling as much because they're hoping that the prices go down. Now, is that true? I don't know. That was just kind of a rumor. I need to check. But my thought process is if they're not filling it in yet, when we get to winter, when the demand is going to be higher, instead of pulling it from storage, they're not only going to be pulling it from storage where there's a low supply in storage because they're not buying it and putting it into storage as of yet, are also going to be buying it on the open market. And so demand is going to skyrocket for heating and just for overall. I mean, you just use more natural gas in the winter. It's just how it goes. So that is my thought process and thesis on LNG. And I think it's going to continue to be exacerbated because all those contracts are drying up between Russia and Europe. So sorry, that was a big tangent there, but hopefully it helped. Small caps are hella risky. Things take a turn for the worse and head into recession, showing as cheap right now, thus assuming no further earnings compression. Good thought process. So all the earnings compression impacts have already kind of been played in, you think? Or you think that the price earnings has contracted enough that they're planning for future compression in earnings? Oh, you're saying it's cheap, assuming no. Got it. Yeah, I mean, if it's trading 8 to 9 and you have 30% hits, then it's going to be kind of fairly valued. 2 to 3x across Europe. There's some cool conversations we had, man. I don't want to get too far into it because I don't know what's proprietary and what's not. But anyway, reckon gas prices are going to go 2 to 4x across Europe in the winter, and can already see Russia turning off the taps of Nord Stream. Energy warfare. Yeah, and you have people talking about coal again. You have people using coal again, and you have people talking about uranium again. So I think it's interesting. I'm curious to see how this persists. The long-term effects of this are going to shape things massively, especially for me in oil and gas. I wanted to go work in Russia. I guess I can't anymore. But yeah, it would have huge implications on how energy is transferred around the world. Russia, like the United States, is a huge energy producer. Believe it or not, in the United States, we make about 12 to 13 million barrels of oil a day, and we use the majority of it. We import about 2 to 3 million barrels from Canada, and the rest we get a little bit from Saudi Arabia and our friends from the Middle East. We're also trying to do some with Venezuela. I don't know how much we get from Venezuela. Probably not a lot because of the sanctions, but Biden's talking about bringing it back. So Russia was bringing in 5 to 7 million barrels of oil into Europe every day. Now they're selling that to China, India. And so there's a deficit of 5 to 7 million barrels of oil a day in Europe. Somebody's going to have to fill that void, right? So the stream of supply is going to have to change to Europe for oil and natural gas. And so that puts pressure, or tailwinds rather, not headwinds, but tailwinds on projects outside of Russia to come up with the supply. So previous countries and previous projects that gas maybe not necessarily been as successful. Obviously, with the recent jump up in price, gas is kind of out of its bear market. It's starting to look pretty good for some of those gas projects. So sometimes I chant and do rain dances, but the money never shows. I would just watch Matt, and that seems to work. Hey, man, I don't know what that means, but God bless you. Keep doing those rain dances. Jerome Powell said today they're slowing down the rates of increases going forward. Clearly, we're a big 75% or 0.75% raises. I honestly thought I was kind of hoping for a big 1% jump today. Just because. But I'm curious, since we're going to have a month off from FOMC hikes, there's not going to be one in August. The next meeting is in September. I'm curious what data we get in August for July, and then what data we get in September for August. So you need some large keto wraps, lettuce, tomato, cut up your steak to make some big ass steak tacos, bro. Keep those simple carbs out. I know, man. You're the man. Would you consider buying into some export terminal stocks that are still under construction, like Next Decade or Teleron? I wouldn't buy Tel, though. I used to own LNG, but the partnership. I didn't own Cheniere. There was a partnership. I think it was CQP. Let me check. And it paid a pretty hefty dividend. And yeah, so I owned CQP and sold that at one point. I think I made some good money and I sold it. Wasn't a lot, a couple dozen % or something. I was holding it more so for the dividend. And I sold it. So I think I was just doing some consolidation. But I wouldn't be opposed to it. I think it would just depend on how much debt, because those LNG export facilities cost a lot of money to build. And that's why Cheniere is under so much debt. They were building it for import, and then they decided to change the construction and the design to do export because of all the gas that we started finding in the late 2000s. So now, obviously, they're making a crap ton of money. And I sold it, I think, when they were doing commissioning for Train 4. And I've driven by Sabine Pass, dude. It is crazy. Like, it's a pretty cool facility. It's pretty dope. So if any of you guys are in the Louisiana, Texas border area, it's pretty cool to see. But anyway, no, just be blunt. No, I haven't looked. And depending on what it looks like, I might be interested, especially if there's a downturn here in the oil and gas downturn, more specifically towards oil. I feel that there will be a bear market here coming soon for oil, or just a retracement. Maybe not. Well, I guess technically anything below 20% is a bear market. So technically we're already in a bear market for oil, but it just doesn't feel like that because it's so elevated from where it was 2 years ago. But if hopefully those other stocks, energy stocks, get caught up in a wind with it and they become cheap, then maybe. I was really into pipeline stocks. I was really big into BP Midstream Partners, and I had another one. Crap, who was it? Oh, KMI at one point, Kinder Morgan, and made some decent dividends off of those. And Shell just bought back their midstream, which I'm trying to understand. During certain markets, downturns, they spin off these partnerships and then still maintain general partnership and ownership, and they run them and everything like that, and they make some money off the spinoff, and then once it plays out, and I guess they don't need the money as much anymore, they bring them back in. So interesting. Thank you, Matt. Hope you're doing well, brother. Reach out if you need anything. Ryan Longwood, what's going on? Matty Divides, let's go. Hot take, Jerome and company are doing a good job outside of a couple of transitory gaffes. I would agree, personally. I'm proud, to be very frank. I'm very proud. One, Jerome's very articulate, and I admire that. Two, I admire that he stuck to his guns about ensuring that we do a very quick Fed interest rate increase. And I anticipate, he hasn't said anything about, he said basically open the floodgates at first, and we can kind of pull back later on when things kind of normalize closer down to 2% or whatever. So what I continue to visualize that is high now, curb some growth. And I thought he did a good job explaining it today. I was in and out of doing some emails and stuff like that, so I didn't catch every word. But basically what he said was he doesn't want to enter the U.S. into a full-on Great Depression or anything like that. But he wants to alleviate some of the demand, so that way supply chains can kind of catch up, which makes sense. And we've been in this place so far, and it's not going to take much, because let me just kind of go into this. Companies have had so much free money. The Amazons, Facebooks, the Googles of the world have had so much free money that they were, and rightfully so to an extent, building their business plans for 2022, 2023, 2024. And with that, at the hiring sprees that they had, if you look year over year on employee growth for Google went from 140,000 to 170,000 year over year in Q2. So 30,000 employees. They need somewhere to sit. They need somewhere to work. They need somewhere to eat. You have to think Google. They give you free food and everything like that. So you have to think each one of those. And I anticipate the same was at Apple, Facebook, a lot of these other companies. 30,000 people year over year, which if you think about it is over 20% growth in the employee count at Google year over year, which was pretty impressive. So you think about that. You think about how much floor space you're going to require. People were planning on that 20% annualized growth rate for, let's just say, 2 to 3 additional years, and yet free money has stopped. And so with that, you're going to have a retracement. So now you have all this open floor space, warehouse space that people are either stopping, getting rid of, assigning to others, wholesaling, whatever, to get whatever write-downs they can, take advantage of it while they can. And to be frank, they've had all these things built, or they're building them in the process. Now they're withdrawing those promises. So it's not going to take much of a slowdown and some time for those capacities to kind of open up, because things have been operating off of the 2020, 2021 sort of revamp, get back to work sort of mindset. Now that free money is kind of out of the market, those things are still occurring. People are still building them. Maybe some people go bankrupt, but in reality, I think people are well financially compared off to other times and recessions. But it doesn't take much slowdown in time for those things to kind of catch up. And so once that happens, I feel like we can kind of go back to work, trim back a little bit on, say, the federal interest rates, and let the collar, loosen the collar a notch or two, and kind of let things kind of go back to normal to an extent. I'm not saying cut, but I'm saying, if we get up to 4%, right, go from 4% to 3%, and then, on a month-to-month basis, check to see if instead of these 0.75% hikes, we go to a 0.25% hike every other meeting or something of the like. Get to a more normalized rate raise. Because if you look, especially 0.75 hasn't been done since the 90s, right? So you look at normal interest rate hikes, it's normally 0.25, 0.5. And so you look, 2.75% interest rate hikes in a row, it's 1.5%. Generally speaking, that's going to take 7 or 8 meetings to get to in a normal time frame. So it's unprecedented times. And so with that, one thing that I want to know a little bit more about, though, and I've been kind of keeping an eye on in the background, is and sorry if I'm just going off on these tangents. I mean to get back to your guys' questions, so I apologize. The offloading of the balance sheet. I know they're not outright selling these notes that they have on the balance sheet, but they're supposed to be letting them mature. And when I look at the total assets on the Fed website, it doesn't seem to be going down all too much. I was expecting, 45 to 60 billion every month, and I haven't really been seeing that to an extent. And so maybe it just is hangover, and it'll eventually catch up. And it was just the first couple months of kind of things maturing still, and not maturing rather, and now things are going to start maturing, and it'll kind of be falling off. So maybe it's just a month or two delay, and it just hasn't kind of showed up yet. But eventually they're going to start ramping it up to 90 billion or something, or 100 billion offloaded. So I'm kind of curious to see how that looks. And to be frank, if they aren't renewing the market and they're kind of letting things kind of just mature as they have, I'm pretty proud of the bond market, to be very frank, because honestly, initially the thing that I thought about was they're going to sell these things. And I was that's going to kill the market for years, right? That's going to kill the bond market. And then I recognized it's no, they're not going to sell them. They're just going to let them mature. So got it. That helps a little bit. And so obviously the fact that they're not buying up everything is the reason why the prices have kind of gone to the way they have, spiked up very quickly. And now they've kind of flatlined and even retraced a little bit because people are buying back into the bond market because yields are somewhat attractive comparatively to what they were in the past. So, people are looking to diversify a little bit. Who knows if people think that we're still going to go down another 20% of the market, so they run to a safe haven like bonds. And, it's been nice because that kind of helps the bond market a little bit. But I anticipate bonds will continue to raise in rates. I don't want to say they're going to get worse before they get better, but I anticipate bonds are going to go up to 4% range or something like that in the near year future or something like that. It just won't make sense for Fed rates to be 4 or 5% and bonds to be 3.5% like they are. So I anticipate it'll catch up eventually. I think you had an initial kind of spike up in the bond yields because the Fed was no longer buying, and then now you're kind of seeing the retail investors, institutional investors buy back in a little bit for hedging their bets against the market. And then eventually things are going to catch back up where the Fed rates are so high that they're going to have to raise the rate of the 20 to 30 year bonds. I could be wrong. I'm not good with bonds. I'm really not. So where have I been? Interesting conversation about that. And I was going to do this stream on that channel and I don't have access. So that's all I'll say. Normally this is a same StreamYard account. I logged onto the StreamYard account. I was going to do a stream on there and it's gone. I don't have a connection to it. So and all the other websites and stuff I'm not on anymore. So interesting. Manchin helped to tank the infrastructure bill in the Senate. Okay. You know more about that than I do, for sure. Huh. Yeah, I'll have to ask you about that. That's pretty interesting. What are my thoughts on MMP? I don't know what MMP is. Oh, Magellan. I don't know, my guys. I would look if that was you, and I was looking at any of these midstream companies. I would just look at where they're investing, where they have future pipelines being built, and I would just look at how much debt they have, debt to income. I would look at how favorable or variable their rates are, because they don't make money off of oil price going up and down, right? What they make money off of is a byproduct of volume, right? So if volume goes up, and that helps when oil price is high, volumes generally go up, more people are drilling gas, oil, etc. They get money based off of being a toll system. So they collect at the facility sites, compression sites, wherever, and ship them for people, transport it for people. And with that, they take a commission. They don't, maybe some of them have a structure where they get a commission based off of oil price, but it's likely that they don't. So yes, I would just be cautious about what companies have what assets, where are they building, is there continuous drilling? Like if somebody's building in, say, I don't know, Washington State or something like that, it's not really going to be a company I'm intrigued in. But if they're building in the Permian, they're building in the Gulf of Mexico, they're building in maybe some of the Marcellus or something like that, where they're continuing to do work, they're building between Canada and the US, that's a little bit different, right? That's necessary. That's going to be expanded infrastructure. Expanded infrastructure means more revenue, and yada yada yada. So that's what I'd be on the look for, and to see what kind of debt they have, because it's capital intensive for some of these midstream companies, man, and they operate differently than a C corp. Most of them are limited partnerships, and so they basically are debt vehicles where they're consistently trying to continue to pull on debt and pay the interest rates, and that way. I don't know what my Siri is doing, so I apologize. Chris, you didn't see the news that apparently they cut a deal to get Manchin back on board. So I'll have on Getting Market Watch about an hour ago. Didn't read it yet. Huh. I'll have to poke on that. I don't know what you guys are talking about. So, hello, Miss Allgood. Hopefully you were back from your walk and gardening. Long time no chat. It's Inflation Reduction Act of 2022, not Build Back Better bill. Interesting. I'll have to read more on that. Thanks, Everclear Boy. I need to do that. Do you have any WhatsApp groups you're leading? Notice you're not in the main one anymore. Yeah, man, you can reach out to me. I'll talk to anybody, and more than happy to chat with anybody. Reach out to me on Instagram or Twitter, and I can be more than happy to start chatting with you. No problems. Yeah, I need to read up on that. I don't know what the hell you guys are even talking about, so I'm a loser. But yeah, that's really it, man. An hour. Has it really been like an hour or so since I've been on? Yeah. I know it's a little bit interesting. I don't normally stream on this channel. I normally stream on the other channel, but different circumstances call for maneuvers. And I know for a fact, because I did a stream, I'm going to lose some followers on here, but it's likely that I'll end up doing more streams on here just based off the fact that I don't have the other channel anymore. So, which is somewhat unresolved and interesting to talk about. But maybe I'll relay it more when I have more to talk about or news. But yeah, I hope things are going well for you guys. Really curious. The portfolio is doing relatively well for me. Still down pretty significantly. I continue to add. No problems there. And yeah, continue to add on a day-to-day basis that I get capital. Any money that I get from sponsorships, I add to the market. I check my checking account. I got an extra, $1,000 in there. I put it in the market. And so with that, I'm going to continue to do so. Real estate as well. I think that's something I'm going to get involved in. And people might be like, why? Interest rates are so high right now on mortgages, and that's short-lived, I feel. I'm not going to say it's going to go back down to 2.5%, but, I honestly think that, it might be a little bit of pain to be able to grab real estate right now. And I'm not going to overpay for something, but if prices continue to get cut, I've seen prices get cut anywhere between 15 to 20% for some areas, and pick it up. And when I pick it up, hold it long term. And there's a property next door to a family rental property that I know of, and hopefully be able to pick up on that. And that'll be a really good ad, and might be an opportunity for a place to stay if I ever move back. Who knows? Maybe I'd Airbnb it if I have the opportunity to do so. That actually could be a good avenue in the meantime, especially if I want to do like a student rental or something like that. But yeah, curious if any of you guys have any questions. You could always reach out to me on Twitter, Instagram. I'm always available for you guys. Love talking to you guys always. Just don't like to be in environments where it just seems toxic and talked down on. I'm not saying I'm the smartest guy in the room, but I have a little bit of intelligence behind me, and work hard for where I've gotten to. And to be dismissed is not appropriate. And I admit when I'm wrong, and I try to do my best and try to be as open and transparent to all of you guys. I admit I've made mistakes for sure, and I've never taken a video down because of it. I've always kept all the videos up that I've ever posted. But as always, I try to encourage you guys not to listen to the words that come out of my mouth selectively. I try to be very crucial with my words. Sometimes I go off the cuff, and not everything should be taken, sometimes things should be taken with a grain of salt. But generally speaking, when I do something, I'm very precise, especially when it comes to financial discussions. And it's all for entertainment purposes anyway. But at the end of the day, when I say, I'm picking up Palantir is a huge portion of my portfolio. And I say 3,300 shares, a lot of you guys might get, hot in your seat. But 3,300 shares in the grand scheme of my portfolio is a lot smaller than what it would be for a lot of you guys. And so I want you guys to take acknowledgement that when I talk about my positions in TQQQ, when I talk about my positions in Palantir, when I talk about my positions, I have 300 shares of Google, 300 shares of Amazon. When I talk about these positions, they're large positions for a majority of people. Sometimes they're larger than some people's portfolios, and that's no hit on anybody that's listening to this. But what I want you to recognize is it's appropriate for my position sizing. And I don't want anybody to say, well, Matt has 300 shares. I need 300 shares. My portfolio has been built over 8 to 9 years and is hundreds of thousands of dollars. And I don't want anybody to basically just buy something and end up in a place. I've had people reach out to me say, Palantir's dog crap, Wish is dog crap, Rocket Lab's dog crap. It's like, I'm investing for myself and myself only. I'm not telling anybody to buy. Do I think it's a good buy? Yes, I'll buy. Wish obviously has been a huge hamper on me, but I haven't sold any of it. I'm still holding on to the whatever percent loss it is. So I had people reach out to me like, I put 30% of my portfolio in X. I put 30% of my portfolio in Y. And at the end of the day, like, I hate to say this, but that's your own fault, right? Like, did you do your due diligence? Like, yeah, I'm a smart dude. You have to think I can take on more risk than some of you guys. Like, I could lose 50 grand and it's not going to be that hurtful. And it sounds like a dickish thing to say, but I've had 8 to 9 years to build up whatever portfolio size that I have. 50 grand to a lot of you guys is larger than your portfolio size. And like I said, I'm not trying to belittle that. And I'm appreciative of everybody's work that they put in. And I know I started it to the point where $100 was a lot to me too. I put in $100 and look at it every single day. And I'd be like, it's down $1. What the hell am I doing? Why am I investing? Like, I get it. I've been there. But $100 turns into $5. $500 turns into $1,000. $1,000 turns into $10. $10,000 turns into $50. And all it takes is persistence and continued capital contributions and diligence and discipline, and you'll get there. And that $1,000 will eventually, which is right now the biggest thing for you in your mind, because it's the only $1,000 you have, and you're playing with it, and you're trying to make it, go to $1 million. The easiest way to go from $1 million when you have $1,000 is add another $1,000 to the account. It's going to be much easier to add $1,000 to save $1,000, and that'll literally have the amount of times you need to double your money than from going to 1,000 to 2,000 by just investing alone. And so I preach that very heavily. I'm a capital discipline kind of guy. I'm a long-term investor kind of guy. And so I straight up say, when I invest in some of those things, Virgin Galactic being one of them, I'm okay if this thing goes to zero. And if you're investing 30% of your portfolio, and you heard me say that, then I don't want to say I didn't kind of give you the range of outcomes, but I kind of gave you the range of outcomes and you selectively listened. And that shouldn't be put on me. I think I told you guys, like when I invested in Virgin Galactic, it was like a 1% or 1.5% position in my portfolio. And I was like, if it 10x's, it 10x's. If it goes to zero, it goes to zero. Like, and obviously it's struggling, right? But you put 30% of your portfolio in, that's not, to be very frank, different scenario, right? You heard I had $9,000. You got excited. You were like, oh, Matt's got $9,000 in Virgin Galactic. $9,000 to me is 1%, 1.5%. Might be 50% of your portfolio. I'm not trying to belittle that. I just want you to be cautious. Listen to the words that come out of people's mouths. It's important, but to understand their perspective is very different. And don't let somebody else's, and I have this happen a lot, don't let somebody else's truth become your perspective, right? My truth is Palantir is 1.5%. Your perspective, or, whatever, and it could go the other way. Sorry, maybe it's the other way. Don't let somebody else's perspective become your truth. My perspective of Palantir is that it's going to go to the moon, and that, my 3 or 4% portfolio ownership in Palantir is going to eventually grow to 20% of my portfolio. You might be sitting there being like, well, crap, that sounds like a 6x to me, 10x to me. So I'm going to put 10%, 20% of my portfolio, to the point where you throw out risk management and everything like that. I encourage you not to do that. I encourage you to think. As always, I encourage you guys to think about the 5 key things that I talk about all the time. Objective, what are you investing for? 2, what's your risk tolerance? What if you saw everything go to zero, would you be okay with that? The answer is probably no. So invest accordingly. 3, how much capital are you going to be adding? And how consistently are you going to be adding it, right? I'm trying to think. Sorry. Objective, time horizon, risk tolerance. Oh, yeah, time horizon. How long are you investing for? If you're investing it for tomorrow. Like I had somebody ask me, like, I need this money in 6 months, but it's just sitting there. And I'm like, keep it in cash, my guy. He didn't like the answer. But, they can go down 10% overnight. You know what I mean? Like, so depending on what asset class, it could go down more than that. So just want people to be conscious of themselves. I want people to take ownership of their actions. I don't want people to flip-flop. A lot of flip-flopping I've seen, and I just, don't want to be a part of that. And I want people to be disciplined, and I want people to take ownership. And, I say this is for entertainment purposes, but, I try to help in any way that I can. And some people, it's legitimately for entertainment. And when it's done for entertainment, you should take it as entertainment, if you catch what I'm saying. So, yeah, hope you guys are doing well. Let me know if you have any questions about anything. I'm open book, Twitter, Facebook, not Facebook really, Twitter, Instagram. You can comment on here. I'll see it. I'll keep this live stream up anyway. So hope you guys have a good one. Gonna run, do some stuff. It's 5:30. I gotta answer some emails again. And I will talk to you guys soon. Hopefully you guys have a good one. And let me know if there's a preferred time. Maybe you guys like streams on here. I was doing a Wednesday stream for a while. I stopped. Curious. Yeah, just curious what you guys are thinking. Might collaborate with some other folks as well. So maybe I'll go on their channels or whatever. But I want to continue, instead of having, a singular position. I want to expand the group. I want to expand the network. I want to expand perspectives. I want you guys to get the best of everything. And I've learned most from others, and being able to look at their perspective, learn from them, learn from their experience, and establish it and incorporate it into my own life. And I've met some great people like Dave. I've met some great people just all around, like Ryan, GW, Thumper, Randy, a bunch of people that I've learned a lot from. And Kyle, to an extent. I've learned a lot from Kyle. And to be very blunt, like those are the times where I grow the most, is being able to collaborate with those guys, hear their perspectives, and bounce ideas off of. So I hope to continue to do that, and reach out to some other folks. I'd love to work with Amit. I'd love to work with Chris. They seem like really cool guys, and I really like their stream that they have going. So collaborating with them, being able to stream with them, once a quarter or something like that would be something I'd be interested in. I'm sure I would learn a crap ton from those guys. So if you guys have any thoughts about who you want to collaborate with, or if you're on Twitter and you see anybody that you think I'd collaborate with, let them know. Tag me in it. I'm all about it. You know what I mean? So much appreciated. Love you guys. And this is me showing you that I'm not crazy, but I can put on a face for an hour and 20 minutes, that I'm not a crazy person. Some people thought I went off the deep end. I was depressed. Who knows what. But no, man, I'm perfectly good. I'm just cleaning clutter and keeping my mind healthy. So I'll talk to you guys soon. Have a good one. Cheers.